Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Welcome to my podcast. Well, you know, it's interesting that even if you didn't know what was behind this correction in silver and gold and tech, you'd been fine. You would have saw what's coming. If you didn't know that, again, that the tariffs are upsetting. No one knows what the Supreme Court is going to do. They're upset because Trump's new pick for the Federal Reserve, he's not going to run in and cut rates every time the market trips over itself and it starts going down. Look at the geopolitical issues. They're everywhere. You can go on and on and on. Europe, Japan, they're unstable now. So you could have a laundry list, okay, of what took this market down, but you didn't need to know any of it. And you would have been just fine. And you would have been out of your gold and your silver and your tech in time. Now, the interesting thing that's going on now, the dollar is going up because the yield's going up. But nobody's reporting that the biggest thing when you're trading is trend. Trend's your friend. Do you know that the dollar is still in a downtrend, which means this is really what they call a snapback. And that could break and go right back down again, moving gold and silver and tech right back up. Let's go to the chart. I'll show you what I mean. No one's talking about this. Let's take a look at the dollar for a moment, right here. Now, if you can see this here, this is a downtrend. You can see they call these stochastics. That's a downtrend. Red's crossing yellow. It's crossing this white dotted line. That informs me on my chart, my Pro 2 chart we designed ourselves, that the trend is down. Now take a look at this. The trend of the dollar, look how long the dollar has been going down. These are considered snapbacks. Now, what are snapbacks? Snapbacks are usually when traders cover their position, a short position, for example, or people will come in, traders will come in and start doing, swing trades, day trades. So this is called a snapback. Let me just show you for a second. I don't want to bore you here, but that is a snapback right here inside the overall, down trend. We're in a downtrend. You can clearly see it downtrend. Now, there's no confirmation yet that this dollar is going to keep going up. Now, the only way it will be a confirmation is if this stochastic, you get enough buying here, and that will turn the direction, it will turn the stochastic back up. That will confirm this is no longer a snapback, but a new trend is beginning. But we're in a downtrend. Nobody wants to tell you that. So you could be sitting there thinking everything's okay now, I'm short and da-da-da, but this thing could turn around in a heartbeat because it's a snapback, and otherwise what is a severe downtrend. So that has to be watched carefully. But going back to, no one should have been surprised, even with all these problems of tariffs and everything else, because what good traders do, professionals do, is they follow the bond market. You've got to follow the bond market, because if you don't follow the bond market, you're screwed. Because the bond market tells you the truth. We follow it religiously here at Phil's Gang. First thing we look at every morning, we look at the bond market and we look at the spreads. The spreads between a 10-year Treasury and corporate bonds. If they're tight, then that means we got good news. The banks are still not afraid to lend. Very important thing to look at. Now, so the bond market follows the money. It's that simple. Yields think of the yields as the truth serum. So it's the roadmap of the market. It actually tells you what the stock market's going to do. And so what's happened is this, that the yields have been going up for a very long time. Here, we'll go back to our 10-year Treasury. Let me go back, show you. And for anyone who said they were surprised, they didn't know this was going to happen, and they weren't prepared, and they don't understand how to trade. They don't understand the most important thing in trading is the bond market. If you don't look at the bond market, and take a look here, for example, if you look, this bond market is very interesting because what's happened is, look at this consolidation we had in this bond market right here. Look at that consolidation. And then what happened? It broke out. So yields are going up. What did we know? Now going all the way back to the 14th, yields were going up. The 14th. So this is no surprise. So what it was telling us as it was going up, it was telling us there's going to be a problem with the tech stocks, there's going to be a problem with gold, there's going to be a problem with silver. I mean, because again, the dollar follows yields. Yields go up, then that's really bad for gold, silver, and tech. So again, if you follow the bond market, you're following the roadmap, it tells you exactly what to expect, where we're heading, where the market's going, and the big thing is that dollar, that darn dollar, because the dollar is what really took this whole thing down, gold, silver, and tech. As long as we have all these fears, they keep listing all these fears, the noise, right? Tariffs, da-da-da. People go and they buy bonds. Yields go up. So the traders now are shifting out of stocks into buying bonds for safety. Yields go up. But the killer is the dollar. When the dollar goes up, the dollar is very strong. And when the dollar is strong, that kills your tech. That kills your gold. That kills your silver. But nobody wanted to talk about that because of all the hype. The market's never going to come down again. The gold market, silver market, never going to come down again. Just like Moo will never come down. One day the same thing's going to happen with Moo. But it doesn't matter. It doesn't matter because if you have the skills to short, who cares? We'll make the money on the way up, and then when we get something like this. But you're going to know in advance when Moo's going to drop. Moo is going to be the single stock that's going to tell you after the bond market when we're going to get a collapse in tech again, especially Moo. So understand what's going on. As long as we have right now Europeans chasing the CO, and this is the tough part. They're buying dollars. They have to. They can't buy treasuries with euros. They got to buy with dollars. So yields up, dollars up. Yields down, dollars down. Right now, it's up. This is nothing new. I just showed you this chart. This goes back weeks and weeks. How would you not know this was going to occur? I mean, it wasn't going to occur. Everyone knew it was if you follow the bond market. And that's why the bond market is so funny. When there's a holiday, they shut the bond market. But they trade a stock market. How stupid is that? What are you, nuts? That's nuts. Who can trade a stock market unless you know what the bond market's doing? Because, again, the bond market's the truth serum. Not these guys on CNBC or Fox Business. There's no truth there. They read cue cards, most of them. And even the ones that are smart, been around the business, they're not going to tell you the truth. Their job is to get you pumped up. Remember what Wall Street's about. optimism, optimism, optimism. And while you're all optimistic and it's a soft landing, everything's wonderful, right? Consumers strong. What were they doing? They were following the bond market. They were following the yield. They were following the dollar. Told us weeks and weeks ago this is going to happen. So when they're selling optimism, which is their job, to sell optimism, they were doing just the opposite of what they were saying. They were preparing and getting ready to sell short or do hedges. And you didn't know that. All you would hear, wow, everything's great, everything's wonderful. That's their job, to make you feel happy. Because, again, remember, they need you to go buy stuff. So again, please watch the yield on the dollar. It's going down, okay? It's going down, all right? Until that turns and starts going back up, this thing could unravel quickly. And now if you're shorting, you could get hurt going the other way. You'll never get hurt watching the bond market. You never will. Now, if you look at what was going on, again, you had to for this market to resume its gold and silver and trend and tech trend. They got to get rid of this expectations. Every time you turn around, oh, we're expecting a cut. We're expecting a rate cut. As long as they keep saying we're expecting a rate cut, we're expecting a rate cut, that's got to stop. They got to stop saying we're expecting lower inflation. Every time, if they don't stop with this rate cut, lower inflation, rate inflation, then guess what happens? The dollar's going to keep going up. Yields are going to keep going up. Dollar's going to follow the yields. They got to stop with that, or this market's not going to turn around. That's very important to remember. So they got to stop. They got to stop being scared and buying treasuries. That's what they're doing now. They're shifting out of stocks and buying treasuries. As long as they keep buying treasuries, the market's screwed. And that's what's happening. And then the foreigners, as long as the foreigners, they chase yield. They see the yields in the 10-year treasury. What do you think they're going to do? Of course they're going to buy bonds. They're chasing yields. But the real problem, as I said a moment ago, they got to buy dollars. Now you get a double whammy on the dollars. You got the U.S. investors are buying treasuries, and the dollar is a problem, gets stronger. And these guys are buying dollars to buy treasuries. So now you got a double whammy taken off. So, again, we're not going to see this turn around anytime soon until you start seeing what's going on, okay, again, with Europe, with the global markets. Are they still going to continue buying these treasuries? I would say this, if you just continue to watch every day the yield, it'll tell you exactly which direction the market's going to go, which direction gold and silver is going to go, which direction tech's going to go. It never lies to you. It's the truth. So if you do that and you keep watching the trend on the dollar, okay, that's still going down, if it continues to go down, then this thing could flip and go the other ways. This is not hard stuff. The problem is we don't get the truth. We don't get the truth from CNBC and Fox Business and all these characters. They don't tell you the truth. They tell you what you want to hear. That's what they want to do. Now, the other thing that we have to be very careful of, I think I made a list of them here. I hope I did anyways. We had, as far as your gold goes, if you look at the amount of buying that's going on with the central banks, they're still buying gold and silver, mostly gold. I mean, there's no question about it. I mean, they just are going to keep buying and buying and buying. So I don't see this lasting for a very long time. I just don't see it, okay? But we'll know because once we see the yield and we see the yield heading down, the dollar's going down, now you know, okay, we're going to resume. I better start buying gold and silver and tech again. So the bond market's a wonderful, wonderful thing. And just don't know why people don't look at it more. Oh, I know why, because Wall Street doesn't want you to look at the market. Just like Wall Street doesn't want you to know about what we call a sweet spot on a stock. It's the most important thing. They don't want you to know that. So I hope this helps you. Watch the trend on the dollar, but watch the yields. Okay? And you'll be just fine. Join my gang.